I'm promoting, Lydia, can you hear me?
Yes.
I'm
Hey.
promoting you to, here's your new title, Senior Currency Strategist.
Oh, wow. Hey. Thank you. I accept.
Now, now
You could put that
I,
on your business card.
Business card.
I
Huh?
don't
Resume.
I
Huh?
don't know how a lady is gonna find the senior.
Huh? Oh,
I
yeah,
don't know if she's gonna
senior.
like the
Oh,
senior.
good point, Steve. All right, head, FX
Yeah,
trader
that's nice. That's
for the
better.
Federal Reserve. Would you
Oh
like
my!
that gig?
That'll work.
All right. So
Are,
great to have. Go
are
ahead,
you
Steve.
are you enough of a hypocrite or so bad at economics that you could actually be part of the Federal Reserve, Lydia?
Probably not.
Because
Me
you
too.
could,
I agree with you.
then you could have a pretty good signal service. But anyway, Lydia, welcome back.
Thank you.
Great to have you. And I was thinking of you last week when cable took off. And I guess the key question everyone's asking now is that the beginning of something? It's stalled at a pretty important area. What are your thoughts on cable, both fundamentally before Halloween and technically what are you seeing, my
Yeah.
trading warrior sister?
Before Halloween. Yeah. The Brexit deadline, the
Yeah.
D-Day.
Yeah.
I heard a little bit of Steve's take on the pound. And yeah, I agree. I've been targeting 130 actually since we were down there in 122.
Okay.
And just kind of walk you guys through my thoughts on it. So yeah, this is my larger view. We've had these two waves to the downside. It took us right into support. I think those are 2016. Yeah, 2016 lows.
Okay.
And then we dial in into a daily chart. So what I was looking at is really the fundamentals. And yeah, just like Steve had said, as Brexit has been turning out better than expected, as the market actually cheered the suspension of Parliament and didn't fall apart on that news, and as the markets are actually liking the actions that the new Prime Minister Johnson is taking, for me, that changed the trend, even though the trend has not yet changed.
Okay.
So I feel like we can.
So you're hopeful now that we could avoid a hard Brexit.
No, I didn't say I was hopeful. I'm saying what the
Okay.
market is doing.
Okay. Okay.
Right.
Yeah, because I mean,
saying
it's
what the
still a
market says.
lifetime till the end of the month, I guess, 2 weeks.
Right. So we'll see what happens at the end of the month. To me, a hard Brexit is not off the table. I don't think it's off the table. But right now, actually, the onus or the burden of acceptance is actually on the EU now for a long time. It hasn't been like that really at all. So that's kind of the first time where we're kind of like waiting on the EU. Like, what are they going to do? And will they be hard-nosed with the backstop, with with Ireland and the Northern Irish, all that stuff. So I think hard Brexit is actually still on the table, but right now the market is liking the developments. And really surprisingly was the last Bank of England meeting, their interesting announcement where Governor Carney, and I mean he made it sound like the whole BOE, but they're very they're hawkish. They're actually quite hawkish. I think they would like to raise interest rates because of the weak sterling over for the past 2-3 years. UK is one of the places that still has in high inflation, and high is like, what is it, 1.7? It's not even above 2 like it used to be in the past, but it's higher than other major economies. So I think they would like to raise interest rates, and they're just kind of holding off until October 31st, like I guess like the rest of us, and really seeing what Brexit does. But I was surprised how hawkish they were, quite frankly, and that's also been able to put a little bit underneath the pound as well.
Yeah, I didn't know that, Lydia. So I mean, that's in sharp contrast to the U.S. Fed.
Absolutely, yeah.
So then that interest rate differential could work in favor of cable now.
Yeah, and we'll see that against most of the central banks there. It's going to be a sharp contrast. Again, I think once we see what happens October 31st, and then see what the BOE does in subsequent meetings and how they're sounding, what their rhetoric is sounding like in subsequent meetings to support that. Again, I think we're all just waiting to see how this deal or no deal pans out. So, but that put a first bid underneath the underneath cable, and then we had what happened last week with the Prime Minister and the EU, and that's when we got these two skyrockets on.
Okay, so you're flat now. We went to resistance.
Correct.
How does someone who just watched it in amazement look to finesse an entry now?
So what I would do, and I like this correction that's going on right now. So instead of getting too excited about it when markets open, you should look at this. See if I'll dial down even for, yeah, that's better. So
Okay.
we can dial down in and we can throw a fib on this move to the upside, which was a great hold of the 61.8 previously. I mean, it was brilliant. It was actually quite textbook and shot up, almost hit the 123, which is a good target. It ran into on the daily chart, it ran into the 200-day moving average. So now we have this nice correction. So it's already come into the 38.2, and we're seeing buyers stepping in on this correction. So that's what I would be looking at. This.
Would you kind of like, you never know when markets correct if you're going to see 38.50, 61.8,
Right.
78.6.
No, of course.
So do you teach people to like put a piece on at each fib level?
Yes. So for new traders though, and I work with a lot of newer traders, I tell them to pick, and I'll let them know. I tell them to pick because I think when you're first learning markets, the part of it is the psychology. So you want to kind of find your level, pick and stick to your setup. But yeah, I like to piece in as well. I don't typically piece in on a 38.2 unless I know unless we see that the trend is strong. So pound likes to correct to the 38.2 when we are in strong trends. Otherwise, we get deeper corrections with the pound. And that's just what I've seen over the years. So I like to typically set up within the Fibonacci levels. But so this is an interesting development for it to pop right off of the 38.2, and we're already about 50 pips higher. So
yeah, and look at that RSI reading that you have on that chart, over 80.
Yeah.
That's a confirmed high in my book.
Yeah.
It would be very unusual for a market to peak when momentum is confirming it.
Yeah, I agree with that. Yeah.
Okay.
So we have the RSI confirmed.
What a move in EG
last
week.
Man.
I mean, it was like, everyone thinks it's a low beta, trade, but wow.
Yeah, exactly. It can really move when it does move. But I agree with you. I agree with the perception that it's low beta. So this is the weekly chart, and it looks like, we've been consolidating, but you kind of have to zoom out to see like all this consolidation. If you don't remember, or haven't been following, this is still quite a bit of a correction. So this move right here to the downside is I find it to be quite significant. You can see like how I thought we were in a correction what is that, a month ago, just back in September. This was a correction right off the 68.2. It breached a little bit, then it peaked at 90 again. And now we're in this down move. And this is flipped bearish. So short term, this thing has flipped bearish.
Sell rallies.
Also, this also has corrected almost into the 38.2, and it's backed off as well. Again, a sign of a strong trend. I think pound is generally bullish at this moment. Will probably be bullish and see buying into the 31st. And if things turn out really well, then we're going to see this thing back in these lows in the support level, 86, 80, 85.
Is that your next major support, 86-ish?
Oh yeah.
Based on what, weekly or monthly or?
Yeah, exactly. Even the weekly chart, right? Like that's been.
Oh, you have a moving average coming in there.
Yeah, and the moving average is coming in.
Okay.
Yeah, so earlier this year, we had all of this. We remember we spoke at this time, and you were looking for 94, and I was like, you're crazy. I'm maybe 87, 88, 50.
Yeah.
And it popped there. So, I think Euro Pound is flipped completely. Completely, but it has flipped trends. I think it's headed back into the support zone.
Okay.
on the weekly chart.
Guppy?
Yeah. So I still think the pound yen can get to 140. Again, I think the pound still has room to move on most of these. We can drill down into the daily. Or did I have it on the 4-hour? Okay, so daily.
Yeah.
On the daily, if we just throw, Fib while it's correcting, and we just throw a Fibonacci level on this latest move, like most of these pairs, we're gonna see this is also just correcting. It still hasn't gotten into the fibs like I would like to see. I like it to move a little bit lower, so closer to 135. But this too, if we're just looking at this, I'll just move out to a weekly so we can see the whole thing. But that, I have a resistance level, and then at 140, and then we have the 61.8 at 140.34. So
a lot of confluence there.
Yeah, exactly. I feel like we're more headed for 140 than here stopping at this my next. I have another resistance here at 138. I think 140 is where we go, and that becomes our line in the sand for the pound yen.
Okay.
Obviously, if we get above that, then we can make it back towards the underside is 148. Remember, we were at 148 for a while, but on the underside is really 144 and then 147. So I think if we get above 140, we hold above 140. Brexit goes brilliantly, then we get a deal. It wouldn't be too surprising to see that. Plus, that supports a weak yen, and we'll see what equities do. I don't know. There's been some correlation. The correlation breaks, between the risk currencies like the dollar and the yen. And
yeah, you have a view on the yen. I know you pay attention to it.
Yeah, no, I always I'm always really surprised when we see a strong yen, quite frankly. So yeah, I'm always a little more biased on a weak yen. I think just fundamentals support it. Bank of Japan,
right?
So yeah, I'm more biased on a weak yen. So when we see strong pound, I feel like we could accelerate, which is why I'm biased to 140.
Okay. And the look that cable has against the commodity currencies after last week.
So I think, let me start with the Kiwi, because I think this one's really interesting. Being at $2, 2 Kiwi, is a huge level for the pound Kiwi. And I don't know. I've been really busy the last several months, so I've only been paying attention to the dollar cable and to the euro pound and the pound yen. So when I looked up and okay, let me check out my other pairs, and was surprised to see us at $2. And so this correction took us into the fib, that's what I like. And now we're back at $2. So if we project on this, and so I know you guys don't see me use this much, but we project and see where this is headed after this really brilliant correction. We're headed right back to these highs at, really 205, and it comes in at 204.90, or was that 204.09? So we can really come back into these highs here again, which is really just, just a correction. It took a while, took all year, but it's really just a completion of this correction. Fine, if we can get to new highs. So again, against fundamentals. So we have this Bank of England that's more hawkish than, surprisingly hawkish, I should say, not more hawkish, but they're just surprisingly hawkish after being so dovish for so many years. And we have a Reserve Bank of New Zealand that is decidedly dovish.
Yeah, they want to go to negative rates.
Yeah, exactly, which is surprising.
Yeah, that's a great fundamental story with the technicals backing it up.
Yeah.
I mean, maybe if you look at it as like just one huge rectangle, and 82 to 204 is 22 cents, that if pound really gets going, maybe there's 2.25 in the trade. Yeah, I don't trade it much, but
there's a lot of potential for pound to really unwind the last 2 years of bearishness, right? I mean, we've been extremely bearish on all of these. I think pound Kiwi is actually one of the leaders, just because the RBNZ has surprised us with multiple rate cuts this year, where I don't think they were forecast to give rate cuts. So we have a really weak Kiwi right now, and if the pound ramps up again, whatever happens after the 31st, we'll see. But there's a lot of potential for pound to really ramp up. So I think against some of these other currencies like the Kiwi, same with the Australian dollar. It's the same thing. The
looks better.
RBA is quite dovish as well.
Mhm.
And so, the Australian dollar is also weak, and this is also moving. It's ready to move higher. So this trade is far gone too. I looked up like, oh,
Yeah.
this one is has already taken off too. And then the Canadian dollar still has a lot of room. So Canadian dollar has been really strong this year.
Is that because Canada is not as dovish central bank wise as Australia and New
exactly
Zealand?
right. Yeah.
Okay.
Yep. I think that's exactly right.
Because they're talking about that they would like to tighten too, wouldn't they?
And they did. They tightened in the beginning of the year.
Oh, okay.
Yeah.
That's a long time ago for me.
Yeah, isn't it?
Yeah. So
isn't it? So this
Yeah.
is knocking on former lows. It's right
Yeah.
now contending with $1.66
yeah.
is that levels, former lows on this is our weekly chart. So this is a major level that is just kind of battling it out. It's also
Yeah.
the 38.2 fib on this
Right.
major move to the downside. So this
one looks like, I wouldn't buy this looking for it to catch up to the other two.
No, I wouldn't.
It's like the weak sister. Why
Yeah,
be,
the fundamentals are totally different.
Maybe you wait for the other ones to give topping signals and short this one shorts the weakness.
Or if
Anyway,
you want to buy it, you definitely
Yeah.
need to wait for a correction. A little
Okay.
move below this support and into the fibs. Throw a fib on here on this latest move. Drill it down a little bit. So, but I agree with you. I wouldn't be buying this at all. I would, because the fundamentals don't support it at nearly as much as the other two, the Aussie and the Kiwi. So
Yeah.
this one
Good-
just keep in
good
mind.
diagnosis.
Yeah.
Of showing the
landscape is very
strength and the
different.
weakness. To me, it looked like pound Aussie was a strength, followed by Kiwi, and then this one. So I know you're an RIA,
Yes.
and so you advise people on what to do in the market. Do you have any feel for what's happening here in U.S. equities with the Fed and political turmoil and exactly the market really kind of being trapped in a range for over a year? Do you think this is distribution, or are you looking for another wave to new highs in here, Lydia?
I'm actually looking for another wave to new highs. And
Okay.
for many of the reasons that Steve had stated, I don't feel like the central banks will allow the markets to crash again. I'm interested. Well, it will be interesting to see what those conditions would be. Back in 2008, we didn't have this QE. Central banks, maybe the Swiss National Bank, and I think they were really in the Forex market. No central banks are in stock markets like we're seeing right now. Not just the S&B, but the BOJ is probably one of the biggest holders of ETFs. I don't even like ETFs, mostly for that reason. So there's a lot. The landscape is much different. We have computers now, the algos. We can turn markets off now with the flip of a switch now. What do they call them? Break stoppers.
Circuit breakers.
Circuit breakers. Thank you. So it's the mechanics behind markets now are completely different. When we were purely human mechanisms, we would have fallen by now already. We would have corrected or be at, or I don't know, of a crash. I think we would have seen a 20% correction already to the downside, because we have this slowing global economy. We've had this trade war. I mean, we've had a lot of catalysts that have not moved us lower. I mean, we've dipped. This has been buying the dip environment for, years now.
You have any comment on what's happening in the overnight Fed funds and repo market?
No, I think that's something that we absolutely need to watch. And again, if things were more human, I thought that was a catalyst actually, to see the dollar weaken even more. It hasn't weakened as much as I thought that would trip the dollar up and start
just because of less confidence.
Yeah, less confidence, and the fact that the Fed had to step in overnight markets. I was reading some analysis, I think from Bloomberg, that that was the impetus for 2007 was
Yeah.
that the overnight repo markets were frozen, and that
Okay.
was like the first signal. People ignored it at
The
that
canary.
time.
Yeah.
Yeah,
Well, they'll probably ignore it here for a while too.
Oh, of course, because we have all these, we have everything that I just laid out. I mean, why
Yeah.
would the markets go down? So I think that's something that to certainly pay attention to. And I
Yeah.
think it's also an impetus. I want to say I think the dollar weakens for those reasons, but again, there's the whole risk off the risk off characteristic that the dollar tends to have. We'll see if it has it again. Now it's a different world now. I mean, fewer global economies around the world are using the dollar. The yuan has kind of stepped up in certain places that it didn't have that kind of clout again 10 years ago. It's just a different thing. I mean, so I'm telling clients like we long reduced our stock exposure, but we're buying small, just kind of small buying on dips and just kind of staying, but we're in the markets.
How about if you have this narrative for the dollar to be diversifying outside of the U.S. into other markets whose currencies are beginning to cut into the, part of the de-dollarization trend?
Well, public markets, I don't think anything is more attractive than U.S. markets still.
Okay.
Yeah, I don't think anything's more attractive than the U.S. markets.
Okay. So now would be a good time to show us your great site and the services you provide, Lydia. Thanks for stepping up and coming in today.
No, thanks for having me on. Yeah, thank you. So what I wanted to do is actually alert you guys. This is early, but I've finally put a course together that has recordings and teachings of the things that, like the way that I trade. So this is great for new. So many of you don't need this, but if you are new and you just want something to hold on to and to have for your own, this is coming out. I'm going to launch this in November. So I finally just put it together. So stay close to my Twitter. You follow me at Faith Might. And stay close to my Twitter when I announce the page, the sign-in page, so you can sign up and get it at a reduced price. But I finally put a course together, so I think that this will be really helpful. You have the video, so you can go back, vocabulary, different concepts. Really excited to launch this. It's been a long time. Again, it's been many years on Twitter being asked to teach. I do teach as well. So this really, I call this this is the curriculum. And then if you want my mentoring alongside of it, then we can do that as well. But I think if you're not having time to set aside time to meet with me directly week after week, or I do it twice a week, we meet twice a week, then this is something that you can do at your own pace. The videos will come out weekly, and then at the end of the course, it's a 10-week course, and at the end of the course, then you'll get all the videos and all these the vocabulary and everything like that. So
and a diploma.
And a diploma. I should get out a certificate. Why not?
Yeah,
Good idea, Dale.
How about this for the title? You can no longer be called a newbie.
Yeah,
I think people would really work.
Yeah,
people would really work hard towards that. So, speaking about staying close, you know who to stay close to, my trading warrior sister. And thank you so much for hanging out with us today. And I'd say the gist is constructive on cable against almost everything else out there. And there's still a lifetime between here and Halloween. So
yeah, no kidding.
Yeah. Yep. So all I could say is on Halloween, Lydia, don't get scared if the UK says boo.
Yeah.
All right.
That's what to do now.
All right. So thanks very much again, Lydia. Some great looks today and appreciate it.
Thank you. Thank you guys so much. Thank you for having me.
Okay. Lydia Idem Finkley at Faith Might, everybody. Always, great to have Lydia and look at her charts and her important technical levels.
Oh, somebody wants to see my chart. Can I just show my S&P 500 chart?
Yeah, sure.
I'll give you guys a look at that.
Okay.
Sure. And I'll
You're a
just
very
put
good
it here.
guest. You look at the questions. You know, it's nice.
Yeah. Well, I'm glad you
It
guys are
makes
into
my
the
job
platform. It makes
easier.
it easier. That's me
All
on
right.
Twitter. I put it my handle in the chat, everyone.
Yeah.
And then S&P. This is my S&P 500 look. Weekly chart.
Huh.
So yeah, see all my lines there. But I mean, that's basically where we're at. This is December. It was nice correction. And really was looking to see if we would hold. This is 24. Yeah, 2400. That was what I was when we held that. And I knew we were going to revisit 26. And when we got above 26, it was like all this bearish, all the bears out there. I was like, forget about it. We're going to new. I knew we were going to new highs. So we kind of stumbled. We got above 3,000. And so, I mean, we're in a correction. This is like a dip. There's nothing scary out there. Nothing has been able to rock this market.
What level would?
What level would rock this market? At this juncture, if we get below these lines here, this is
2,700,
27. Yeah, I would even say 27, but really 26 because that's my 61.8. You know, I do the same as I do on Forex. So 2,600 would be the line that makes us visit. At 25, we got the moving average coming in, but 24 again. And then obviously below 2,300. Then I could see us starting to turn bearish and panic and all of that. But until any of that, we're still just stuck here at this support level. 2,800 is like former highs up here. I mean, we're nowhere near panic levels at all.
Okay, so some lines in the sand, that little bonus look on S&P from Lydia. All right, thank you so much, Lydia. Good hunting, and I hope pips just flood your account during this fall trading season.
Thank you. Same to you all. Thank you all so much.
Okay, everyone. So that's it. Remember, don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios. Thanks again, Lydia.
Thank you.